The financial markets, a whirlwind of price movements, present both opportunity and risk. For investors seeking to navigate this complex landscape, understanding how to analyze assets is paramount. This is where technical and fundamental analysis come into play, offering distinct yet complementary approaches to evaluating investments. Technical analysis focuses on the study of past price movements and trading volume to identify patterns and trends that may suggest future price direction. It is like reading a market's footprints, deciphering the clues left behind by previous traders. Fundamental analysis delves into the intrinsic value of an asset, examining factors such as financial statements, industry trends, and economic indicators. Through clear explanations and practical examples, we will explore how these methods can be applied to both traditional stocks and the burgeoning cryptocurrency market. By the end of this journey, you will be equipped with the knowledge to approach investing with greater confidence and clarity. The markets are constantly evolving, demanding adaptability and continuous learning. By embracing both technical and fundamental analysis, you can develop a well-rounded approach that will serve you well in the ever-changing world of finance. Technical analysis helps traders understand market sentiment and price action. It assumes history repeats in financial markets, using past patterns to predict future movements. Analysts study charts to identify trading opportunities and manage risk. Charts show price movements, trends, and patterns. Line, bar, and candlestick charts offer unique perspectives on price action. Indicators confirm trends, identify reversals, and gauge momentum. Moving averages smooth price fluctuations and highlight trends. Oscillators like RSI and MACD measure momentum and signal overbought or oversold conditions. Chart patterns suggest potential trend changes or continuations. Recognizing patterns helps traders anticipate price movements and make informed decisions. Technical analysis can be applied to a wide range of financial instruments, including stocks, bonds, commodities, and cryptocurrencies. The principles remain the same, but the specific indicators and chart patterns used may vary depending on the asset class and the time frame being analyzed. In the stock market, technical analysis is widely used by both short-term traders and long-term investors. Traders may use technical analysis to identify intraday trading opportunities, while investors may use it to determine entry and exit points for long-term positions. The cryptocurrency market, known for its volatility and 24/7 trading activity, presents unique opportunities and challenges for technical analysts. The principles of technical analysis still apply, but the rapid price movements and high trading volume can make it more challenging to identify reliable signals. However, the use of technical indicators and chart patterns can still provide valuable insights into market sentiment and potential price direction. For instance, a cryptocurrency trader might use the Bollinger Bands indicator to identify periods of high and low volatility. When the price breaks out of the Bollinger Bands, it could signal a potential continuation of the trend. While technical analysis focuses on price action and market sentiment, fundamental analysis delves into the underlying factors that drive an asset's value. This involves examining a wide range of qualitative and quantitative data to assess the financial health, profitability, and growth potential of a company or asset. For stocks, fundamental analysis typically starts with an examination of the company's financial statements. The balance sheet provides a snapshot of the company's assets, liabilities, and equity at a specific point in time. The income statement shows the company's revenues, expenses, and profits over a period of time. And the cash flow statement tracks the movement of cash into and out of the company. Beyond the numbers, fundamental analysts also consider qualitative factors such as the company's management team, competitive landscape, industry trends, and regulatory environment. In the world of cryptocurrencies, fundamental analysis takes on a slightly different form. Cryptocurrency analysts focus on factors such as the project's white paper, the team behind it, the technology it is built on, the size and activity of its community, and its overall market adoption. Section 5. Fundamental Analysis in Practice, Stocks and Crypto. Let's illustrate how fundamental analysis can be applied to both stocks and cryptocurrencies with specific examples. Stocks. Imagine you are considering investing in a company called Tech Innovators, Inc. As a fundamental analyst, you would start by examining the company's financial statements. You notice that Tech Innovators has consistently grown its revenue and profits over the past 5 years. The company has a strong balance sheet with low debt and high cash reserves. Furthermore, Tech Innovators operates in a rapidly growing industry and has a strong track record of innovation. Based on these positive fundamentals, you might conclude that Tech Innovators is a sound investment opportunity. Cryptocurrencies. Now, let's consider a hypothetical cryptocurrency called Ethereum Classic. As a fundamental analyst, you would delve into the project's white paper to understand its purpose, technology, and use cases. You discover that Ethereum Classic is a decentralized blockchain platform that enables developers to build and deploy smart contracts. You also learn that Ethereum Classic has a strong and active community of developers and users. Throughout history, numerous investors have achieved remarkable success using technical and fundamental analysis. George Soros is renowned for his global macro trading, identifying macroeconomic imbalances and market dislocations. His famous bet against the British pound in 1992 netted him over $1 billion. Arthur Hayes, co-founder of BitMEX, used technical analysis to capitalize on Bitcoin's volatility. These stories show that success in investing hinges on skill, discipline, and market understanding. While technical and fundamental analysis are often presented as distinct approaches, in practice, they are most effective when used in conjunction with each other. By combining the insights derived from both methods, investors can gain a more comprehensive understanding of the markets and make more informed decisions. For instance, an investor might use fundamental analysis to identify a company with strong growth potential and a solid financial position. Once they have determined that the company's fundamentals are sound, they might then use technical analysis to identify an optimal entry point for their investment. By waiting for a bullish chart pattern or a breakout above a key resistance level, the investor can increase their chances of entering the trade at a favorable price. Similarly, a cryptocurrency trader might use fundamental analysis to identify a promising altcoin with a strong development team and a growing user base. They might then use technical analysis to time their trades, buying during periods of consolidation or when the price bounces off a support level. By combining both approaches, the trader can increase their chances of buying low and selling high. The financial markets are constantly evolving, presenting new challenges and opportunities for investors. To navigate this dynamic landscape successfully, it is essential to embrace continuous learning and adaptation. This applies to both technical and fundamental analysis, as the factors that drive market movements are constantly in flux. For technical analysts, this means staying abreast of new indicators, trading strategies, and chart patterns. It also involves backtesting trading ideas against historical data to determine their effectiveness and refining them as needed. Similarly, for fundamental analysts, staying informed about industry trends, economic developments, and company-specific news is paramount. This involves reading industry reports, following financial news, and attending conferences and webinars. The more knowledgeable you are about the factors that affect the intrinsic value of assets, the better equipped you will be to make sound investment decisions. Furthermore, it's important to remember that no single analytical approach is foolproof. Therefore, it's crucial to manage risk effectively, diversify your portfolio, and never invest more than you can afford to lose. In conclusion, mastering technical and fundamental analysis is an invaluable asset for any investor or trader seeking to navigate the complexities of the financial markets. Technical analysis provides a framework for understanding market sentiment, identifying trends, and timing trades based on historical price patterns and indicators. Fundamental analysis delves into the intrinsic value of assets, examining financial statements, industry dynamics, and other factors that drive long-term growth. By combining these two powerful approaches, investors can gain a more comprehensive understanding of the markets and make more informed decisions. Whether you are analyzing stocks, cryptocurrencies, or any other asset class, the principles of technical and fundamental analysis remain relevant and applicable. However, it's important to remember that analysis is just one piece of the puzzle. Success in investing also requires discipline, risk management, and a commitment to continuous learning and adaptation. By embracing the principles outlined in this essay and committing to ongoing education and practice, you can approach the world of investing with greater confidence and clarity.